Hello everybody, hope you're well. Welcome back to my channel, and if you've not been here before, please like and subscribe. My name's Darren. I've been trading the markets for 20 years, and in this video I'm going to show you how I teach my students how to trade the market using the mechanical strategy that I've developed over the many years of trading. For those of you who are interested, I also offer a one-to-one mentorship program. I limit it to 5 clients every 8 weeks. I'll leave a link in the description below, and if you're interested you can book a call with me and we can have a chat and see if we can get you where you need to be. Okay, we'll get going because it's I make it 4 o'clock to you. Well, 4 o'clock UK time. So how we all doing? Does somebody want to go first? How's your trading going?
Well, I can start. Today I did some rotational trades. There was some interesting opportunities.
Yeah.
But the last one, I took it too early.
Okay. So I've actually got today's profile up on the screen. Can you see that?
Which one?
Can you see my screen?
Yes.
Okay. Today, that is today's profile. Obviously, the previous day here, and then the profile. Let me just bring up my annotations. 1 second. Annotate. 1 second.
For example, the last one I took it on the POC. It was best to take it on the value area high.
So you took it around about here. Am I right? Or one of these areas?
The last one, yes.
So here.
Mm-hmm.
And you took a short. Did you take a short?
Yes, of course.
Okay, down to here. And did you close up the value area low, or did you hold on to it? What did you do?
No, but the problem it was I not took it there, but later.
Sorry, you must have covered your mic then. Sorry, what did you say?
I took it on at 4 o'clock.
4 o'clock.
No, later.
Oh, later on. So, did you take it at the value area low, or whereabouts did you take it? Which area?
At the same price, but later, 1 hour later.
Down here, was it?
No, at the POC, higher.
Oh, at the pot. Oh, here.
Yes, but
okay, good.
this trade, but I took it on the POC, so it was too early.
Oh, you took it too early. Got you. Okay. Well, there was a trade opportunity there, wasn't there? If you look up here down to, I'm not sure. Did it come down to VWAP here, this area?
No,
Did it come down to VWAP?
didn't quite make it.
Did it not? Yeah. I mean, unfortunately, it's not always bloody perfect, is it? You know, it can. Anyway, I'll tell you what I'm going to do. And I've had a bit of a think over the weekend because I knew I was going to do this call today. Is I want to talk you through something that I've noticed over the time of obviously I've been trading and I see a lot of guys, I'm not saying it's particularly you lot that are doing it, but looking at some of the recaps, I see a lot of people just getting in from the previous value area highs and the value area lows in this area here. I mean, have a lot of you actually done the course now, or some of you still doing it? I mean, obviously you're open at different stages, aren't you? So what I want to talk about is something that I've reiterated in the course, that if you're getting in these areas here, this is where I see a lot of people getting stopped out. You can see these areas here getting spiked out, can't you? See here and here, going below the value area low here in this instance. And then you can see this is the value area high here. And it's spiked up to that point of control. Indigo, what was there a lower time frame confirmation as well? Was there a POC or anything like that when you got short?
No, the problem was I saw that in the morning at 26:40.
Yeah.
I saw a lot of reversal. So my idea, but it was not good.
Right. Okay. So did you get in? I'm just trying to figure out where you got in, because if you got in at this area here,
Yes, but at 26.40, not 26.50.
26.40. So you got in
Yes.
around. Oh, so you got in around about here.
Yes.
Oh, around about. Sorry, about here even. Sorry.
Yes. 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 Because I saw a lot of bouncing at this area.
Right. Okay. But you didn't have. You were thinking. I imagine you were thinking this pop here.
Yes.
Is that what you were thinking?
Mhm.
Okay. I mean, when a place of control has been tested multiple times, okay, it just becomes weaker and weaker. I've actually mentioned that in the course, so I'm not sure how far you are in the course. So obviously that's not a trade that I would definitely take. You know, to be honest with you, that's not something I would look at. I'd be looking for the extremes. I always say we always want to look for the extremes of obviously previous profiles. That's probably where you got stuck there. That was the only confirmation you were looking at. Were you looking at order flow or something in this area when you got in?
Yes. But
Right.
I
Okay.
saw some negative delta, but it was not enough.
Yeah, yeah. Yeah. What you need to do is you want to get in on the extremes and not. I mean, this really here. This is the middle of nowhere. You're just in the middle of this previous day profile, aren't you?
Mhm.
But obviously, you'll learn from you know you won't do that again. You need another confluence. So you need another a high time frame or lower time confluence on the edges of previous value. You know that's what you need to look out for. But I'm going off on a tangent now talking about your trade, but um, I want to talk about mechanical backtesting. So something I don't know whether any of you guys backtest or you've ever done backtesting before. Anybody done that? That's on the call today.
But yes.
You do a lot of replays. Okay. So this is something I would definitely advise for everybody to do. Okay. Mechanical backtesting. And you do need a minimum of 20 trades because, as you know, we have lots of places of interest on the charts because we have multiple confluences in different areas, don't we? And everyone gets a little bit confused on where they should be and shouldn't be getting in. But if you do it on a mechanical level, yeah, and you do it over a period of 20 trades, okay, you can see the results, but you must do the same thing over and over again. You can't deviate from what I'm going to sort of tell you today. So if you want to do some back testing or forward testing, whatever you want to do, but my suggestion would be to do some back testing on something I'm going to suggest to everybody today. So as I've talked about in the course, I always talk about taking trades either from the value area high, or should I say just above the value area high in this instance, okay, to go short, okay, or the value area low, make sure it breaks out value area low, okay, into a point of interest, okay. My suggestion is that to do some back testing or forward testing, but back testing would be better because you're not risking any money, okay, is when you're back testing, what you want to do is you want to mark your value area lows and value area highs, okay, and you want to find your first point of interest where it's likely to reverse, okay, and that could be another profile level, place of control, or a delta node. So where I've obviously marked out here as an example, if we've got a other profile node or place of controls in this area here, this is where you want to be taking your trade to go back into value. Okay. And this is obviously another example. This is if obviously we're going to the value high here. We don't want to be taking trades right on the value area lows and the value area highs here. I see a lot of people getting stuck in this area. They get to the value area high here, and they're just going, oh, we're just going to go short. But what you want to look for is liquidity pools above them areas to take the reversal back into value. What you want to see, ideally, is you want to see a burst of volume into this area. You know, on your footprint, let's say it's printing 300 or 400 contracts in total. You want to see sort of double that coming into this area here, or this area here. Okay, and if you're going to do a mechanical entry system or back test, what I would suggest is you do this every single time. You do exactly the same thing. So if you're going to back test, what I'm suggesting here is the previous profile, a previous profile. Okay. You look for a place of interest below or above. Okay. You enter the trade. Okay. And you close it out at the first point of resistance. Okay. And with your stop loss, you don't move your stop loss. Okay. Because that affects the results if you're going to do a back testing scenario on both scenarios. Okay. So this is one scenario, but you want to do a minimum of 20 trades. Okay. But don't change the dynamics of it. Don't think to yourself, oh, well, it's come to a place of interest below the value area low. I'm going to move my stops to break even. Or vice versa, it comes to the value area high and it breaks out and it comes to the place of interest and it obviously reverses. Don't move your stops. Okay. But always close out at the first point of resistance. Okay. Once you've done 20 trades, then you can look back and see what results you're getting. Okay. So this is one scenario for back testing. Okay. I also have another scenario back testing. So if you do 20 trades using this mechanical edge, you want to set it at, right, okay, I'm going to get the entry. Okay. Let's say in this area here, and let's just say we've got a point of interest, and this is your buy zone for argument's sake. Okay, we know it's not exact, don't we? Sometimes you might get a naked point of control in this area here, but this may also be a cluster on the point of control. That makes sense. So this might be a cluster. So this buy zone might be, you know, like 5 pips or something like that. So your stops would be underneath here. Okay. And then obviously you would then enter your position when it gets to your point of interest on your back test and then close at the first point of resistance. But you must always close at the first point of resistance, whether that's a single print, a VWAP, etc., etc. Because if you start changing the dynamics of the back test, then the results aren't going to reflect on what it should be. That makes sense? Nobody talking. Okay. So, okay, I've got people in the chat. That's all good. We didn't, that area is not valid anymore. It does. Let me just go back to the chat here. How are you? That area is not valid anymore. It does. I'm not sure what you're talking about there, Dino. Sorry. Okay, I'll come back to that in a minute. Okay, so another scenario, okay, is this. And these are basically trades that I take all the time, but not really being aware of it, if that makes sense. It's just that when I look back on the recaps, I can see that I'm taking trades from points of interest outside the value area high and value area low. So to do a back test, it makes sense for you guys to do it, you know. You can see exactly what I'm talking about. And another scenario is, I'll come back to you in a minute, Dino, on that. Another scenario is, so you could do 20 trades, as I've just explained in this scenario. Does that make sense on what I'm trying to explain? If you just put in the chat or say yes or no or whatever, that'd be good. Yeah. All right, Mark. Great. Anybody else? Yeah. Okay. But you have to, I mean, at the end of the day, you have to put the work in, okay, to understand what I'm talking about. You can't just, you know, think, I'm not going to put the work in. You have to put the work in. You have to do back testing. You have to put the time in. And once you've got this in your vocabulary, should I say, on your back testing, yeah, you'll have no fear of entering trades, okay? Because you know over a period of 20 trades, you might win 12 of them, okay? And 8 of them might be losses, but you don't know when them 12 winners are going to come, because you could go into this and get 8 losses straight off the bat. I'm not saying you're going to, you know, very unlikely, okay? But if you've got that in your memory bank, that over a period of 20 trades, and out of 20 trades, you win 12 of them, yeah, you are the casino, if that makes sense. Okay, you've got an edge in the market, and that's what you're looking for when you're trading, basically. A casino has a 4.5% edge over all the gamblers, okay, and that's all you are doing in this scenario, okay. You're just looking for your edge, but when you're doing this scenario, it gives you confidence in what you're doing, because you've already done the back testing and you realize that it's just a numbers game, okay. Another scenario which you can do, okay, so these are trades that I take all the time, okay, and you'll see Benetti take them all the time as well. And then there's another scenario, okay, because there's different scenarios when we're trading. Is profile high here, so this is previous day profile high here, and this is actually today's price action. Let me just so this is the previous day profile high, okay, and this is the previous day profile low, okay. It's the same scenario as I've explained on the value high and value low. So what we want to see, we don't want to be taking trades. Well, I don't take trades, should I say, from profile highs and profile lows. What I want to see is I want the liquidity to be swept from this profile high here, in this scenario, into a point of interest. Okay, so you can do the same scenario, back testing, saying, right, what I'm going to do, I'm going to back test 20 trades, okay, but don't rush the 20 trades. Don't say to yourself, oh, I have to get them 20 trades done straight away. It doesn't matter if the trades take, if it takes a month, it doesn't matter. Do you understand what I'm saying? Don't rush the 20 trades, just wait for the scenario to happen, okay, and just back test them 20 trades. So going back to this, so we want the price to sweep a previous profile high, not a value area high, profile high, okay, into a point of interest, okay, doesn't matter what it is, take the trade, close out, first point of resistance, whatever that may be. So there's two scenarios where you can backtest this profile level. Does that make sense? So basically, it's the value area high, backtest into a point of interest, or a profile high into a point of interest, take the trade the other way. But these must be tested separately. So say to yourself, I'm going to back test the value area high and value area low and do 20 trades, okay? And then you can say, right, I'm going to back test the value profile high and profile low. And the price comes down to this area here into a point of interest. I'm going to take the trade into the opposite direction and close at the first point of resistance. And always put your stops, if you've got, like I say, if you've got a delta area, that's sort of 5 pips in this scenario like that, you put your stops there. But don't move your stops. As soon as you move your stops, you're not doing the right thing as far as getting the right results, because then you're sort of messing with the dynamics of the mechanical strategy, if that makes sense. Okay, so I'm going to take some questions. Has anybody got any questions on this scenario that I'm trying to explain?
Darren, I was late to the meeting, but can I ask, did you take any trades today?
Have I taken a trade today? I haven't taken a trade today, no.
So when it opened up this morning,
Yeah.
it opened up at the previous day's POC.
Yeah.
You wouldn't have taken a trade from that position.
Did we have any other confluences or not?
Not on the footprint now.
Okay, but
Not
what
that
about
I
on what about on the lower time frame profiles?
uh, I was I just couldn't I couldn't make myself take the trade, you see. So I didn't
Oh,
really see anything. But then I kicked myself because it took that long to come down to my next point of interest. I give up for the day. It was 3 hours. I just walked off and I come back.
yeah. I'll be honest with you. Pound at the moment is a pain in the arse. It's only moving about 10 pips in the morning. Have you noticed that?
Yes, yeah.
Yeah, it's literally doing like little scalp trades, isn't it? I was talking back to Beneki about this, just saying basically you're better off trading in the afternoon at the moment with pound because pound's just in the morning, and it has been for about oh God, it must be the last sort of 6 weeks or so.
Mhm.
It's just been a really, really small range, and just we can see it's quite a mess. This is today's price action. You see, I mean, ideally, I mean, you see, I mean, this is in the middle of nowhere, isn't it? And that's this morning, isn't it?
Yeah, yeah.
For me, um, I like to have two confluences, and if I've only got one confluence, I mean, it also depends on what happens overnight as well. So if something happened overnight, if I remember rightly, it did. I did have a little look this morning when I put the stream on. It had rejected a previous weekly value area high.
Yes, it did. Yeah, yeah.
Yeah. So in that scenario, if you were going to get short, okay, and I think this was the previous weekly value area high, wasn't it?
That's right. So if it as it reacted off that weekly, would your bias be short?
Yes, it would be. Yeah, I always look at overnight. Yeah,
So whatever it reacts off overnight,
yeah,
that determines your bias.
yes, yeah. That's basically yeah, exactly right, exactly right. The only problem is obviously it's not. This we're talking about this morning. Is this morning that's the value area high, and you can see it's come to this level a few times, doesn't it? You can see where it's just sort of traded up this level. Is depending on your stop. So let's call that 40, 40, 50. So that's like a 10 pip range, isn't it?
Yeah.
From there to there. So unless you've got another point of interest, i.e. a point of control on a lower time frame, that is definitely a trading opportunity to get short with a 10 pip stop. Do you understand what I mean? Or you could even in that scenario, you could even have a smaller stop. You could have it just above the weekly value high here. So then obviously you're reducing your stop loss by probably 5 pips, I would say, looking at that
But then, but then that means I'm taking trades in the middle of value.
yeah, I understand what you're saying. Yeah,
So you're either doing the extremes
yeah,
and you have to
yeah,
wait for it, or
yeah.
going back to how I was trading,
Yeah.
anywhere.
The what, sorry?
That's how I used to trade. I used to just take trades in the middle of value, but since these meetings, I only take trades now on extremes of value.
Yeah, well, yeah. That's why I always say take the extremes because that's where price isn't happy at, and
because the bias was short, and today we've only broken the value area high about what, I don't know, half an hour ago.
Yeah,
I wouldn't have took a trade today. Do you know what I mean?
Yeah, well, that's okay. That's all right. You don't have to take a trade every day, do you?
Well, I'd like to.
I know what you're saying. I know what you're saying, but when you get to a scenario where you think, well, I'm only happy to take a trade in a particular area.
Yeah.
If you sat there watching it, it's very tempting just to, you've got to sit on your hands, haven't you?
Yes, yeah.
It's the hardest thing to do. It's the hardest thing to learn is to sit on your hands. You just got to go right. I'm gonna sit on my hands. I'm not. I'm not.
The fear of missing out there, and that's what it is.
The what? Sorry.
Fear of missing out, and you sit there and go, "Oh, I should have took that trade. Should have took it."
I know what you say. I know exactly what you're saying. But if you can set alerts, like on Trading View or something, you can set alerts, can't you?
I don't know. I haven't
yeah, if you go on Trading View, you can set alerts, free alerts, and it'll come on your phone. There is a way of doing it on Sierra Charts as well, actually.
I tried on Sierra charts, but I couldn't make it happen.
Yeah, there is a way of doing it. There is somewhere in Discord that shows you how to do it. I can't quite remember, to be honest with you. But yeah, I mean, if the trade isn't there, don't force it. Do you know what I mean? I understand what you're saying. This is in the middle of nowhere. For me, this is definitely in the middle of nowhere. But in all fairness, if I'd seen this reject overnight, and I'd seen this, I don't know where it opened up, to be honest with you, because I wasn't taking much notice. And this is opened up at like a point of control. It does feel like it's in the middle of nowhere, but it's probably worth the risk because we've seen that rejection on the weekly.
Yeah.
That makes sense. Because even though you say, obviously, we want to trade for the extremes, which is obviously here, here, so to speak, for argument's sake. This is the extreme of the weekly, isn't it?
Yes.
Because that's the rejection, isn't it? So that is a strong area to take a trade short, definitely.
So would you have put your stops just above that?
Yeah, definitely. Yeah, definitely in that scenario. But I know what you're saying because you obviously wake up in the morning and you're saying, oh, it's in the middle of nowhere. Yes, you are right. It's in the middle of nowhere to this profile, but it's on the value area high of the weekly. Do you understand what I'm saying?
Yeah.
So you've got to take both profiles in consideration. So if price, think it was weekly value area high, and then price opens up at a, let's just say it's an AM POC or whatever. I don't even know where it opened up, to be honest with you. Where did it open up? Did it open up at a POC or not? Or was it a delta? Or
It wasn't far off, I think. I can't remember. Yeah, it was at the POC.
Was it? Okay, yeah. Yeah, so yeah, that would definitely be a trade I would have took without a shadow of a doubt. Because even though this naked POC had been tested, it'd already been tested once overnight, hasn't it?
Yeah.
Here. And you can see just here how many times it got tested throughout the day. And eventually it's obviously broke through, hasn't it? I think this is where Indigo got in 126.40. And he was just looking at he was thinking about this pot here. But I've said it in the course, if you've done most of the course or not, I'm not sure. As I've said, if prices come into this area multiple times, it gets weaker and weaker. I think I explained it on a value area high scenario where prices going in like this, and eventually, it does break through it. So it's just understanding that how many times it's been tested, and obviously overnight it's only been tested once, pretty much this area.
Yeah, that's right.
And rejected, and obviously that was the weekly, which is obviously a really good confluence to get short, especially if we've tested a naked put in control, And eventually it has come. It's pissed about all morning though, there, hasn't it?
Yeah, it's 3 hours to come all the way down, and
it's just
I walked up, and 10 minutes later it actually went long.
Yeah, it's a bloody nightmare, isn't it? It's a nightmare. That's what it's like at the moment. The pound, it's just a little bit crap.
So would you have taken the long as well? Would you take it short and a long on that, or just short bias, short trade?
It would depend what time it got sort of into this area. I've not looked, and maybe somebody can tell me what happened when it got to this value area low. Do you know what happened, Mark? Or was there something here? This area here.
We had other confluence on the other charts. I think we had one on the best one was on the 1248 chart.
What was at the value area, underneath the value area low? What was it?
I know it was. I've shut them down.
Sorry?
I've closed those down.
Don't worry. It's fine. Don't worry. It's fine. Yeah. I would imagine that this is obviously going back to the scenario of, when I talked about the back testing.
Yeah.
That's why I said always look for something, and you just said there was something there, and I didn't know that because I've not even bloody looked. This is why I say it's good to backtest these scenarios, you know, via your high, via your low, and then the profile highs and profile lows, you know, just below them. Because everybody, if you think about it logically, a lot of retail traders, you know, saying, "Oh, that's yesterday's high," for argument's sake. Yeah.
Yeah.
Let's get short. Do you understand what I mean?
Yeah. Yeah.
And generally, it'll just bob up it above it and then come down. So you want to do the opposite of what retail traders are doing or what they're thinking. But you need a point of interest above that area. Did it go to this? Did it go to this pot? By the way, where's price now? Did it go to the pot there? Obviously, it came up to it slightly, only a pip short in it, and then it's traded down, what, 12 pips or something like that. Yeah. Yeah, so this is, you know, to do this back testing, but you got to do it over a period of 20 trades to get, you know, get a true picture. Okay. I'm gonna got some questions in the chat. Are you okay with that with Mark? Yeah, anything else?
Yeah, it's fine, mate.
All right, no worries. Is it part of back test count? Okay. Talk about pot where do you always talk about indigo trade or what does. Okay, I'm just gonna go onto the chat for the I was talking about pot. Yeah, yes. Do you know if it's possible to backtest this kind of strategy using software code? Not as far as I know, Indigo. And if you do find out, let me know because I'd love to know if you could backtest that on some sort of code. That'd be great. That level is an AM pop, 1 to 3. Okay. So Dino said it was a that was an AM pop. Must have been talking about the morning, what we were just talking about, I presume, Dino. The latest retest are very low, 1 to 3 TPO retest. Was the 1 to 3. Okay, so that must have been the value of your low. Retest. Do you take daily pot as still valid if it was tested one time before the day? Or is it invalidated after first test? No, the pot can still have some relevance here. Are we talking about Dino? Here, this daily pot. You can see here, just in this scenario here, is we've just been talking that with Mark that it's been tested 1, 2, 3, 4, 5 times before it finally broke. You see it broke here. So yeah, it just still have some relevance. If that makes sense, Dino. Anybody else got any questions? I've got a question for you. I've got some of you on. Is there anything else you would like to know within the course that we can add some value for you? Anybody got any suggestions that would like to sort of help you with your trade? You know.
Hello.
Hello, is that Oliver? How you doing?
Good. You?
Yeah, not bad, not bad.
Yes. Well, some of the things that I'm struggling, I don't know about others.
Yeah, go on, carry on. There's no there's no bad questions. You know what I mean? Yeah, they're all good.
Yeah. Finding the right level has been really difficult sometimes.
Okay.
That one. And the other thing that I want to learn is I like to know how to read DOM, you know?
The DOM.
Yeah.
Okay.
Price ladder.
Okay.
I have checked a lot of videos, including this Axia. Even I have checked the whole course, but it was in video format, so it would be very nice if you are doing those things then.
Okay. No, that's good. That's good. No, we know read DOM, etc. Choose right, right. Choose right.
Yeah, and even Benesi said that he could read DOM pretty well, and if one of you could.
Okay. No, we'll do that. Yeah. I mean, at the end of the day, we're here to obviously get you guys, you know, being successful. That's the whole idea of the course. So that's why I'm asking you the questions. You know, I'd rather know what you're struggling with, and then we can put that into the course. You know. So choosing the right level. That's obviously one thing that you just suggested, and obviously how to read it. how to read the DOM, yeah?
Yeah.
Yeah, okay, we can do that. We can do that. I mean, as a general rule, when a level has been mitigated on a lower time frame, that level is no longer valid. Okay. Otherwise, you would have you'd have a level at every single price point. You understand what I mean? Because you've got multiple charts. You have to look for levels that haven't been traded through. Does that make sense?
Darren, what if the price reacts off a level before the chart is open, say on the 1 to 3? Just say you've got a POC on the 1 to 3 o'clock chart.
Yeah.
And price has already reacted off that level, but then comes back to that level after the chart opens.
Okay, so if I'm reading that right, let's say it reacts off at, I don't know, 11 o'clock in the morning.
Yeah.
And then it comes back to it 1 o'clock or 1:30 or whatever, yeah?
Yeah.
Yeah, okay. So in that scenario, yeah, is I totally ignore, I only how can I put it into plain English, is if price trades through at a level and that TPO isn't open, I don't disregard that level. That level is still valid. Does that make sense?
Right. So if there's a level on the 1 o'clock and it's 12 o'clock,
Yes.
you would still see that as the level, even though the chart's not open.
Yes. Yeah, definitely. Because what I do is I won't even have that chart open. Okay. But if I open it up on the daily and I think, oh, that price, that the daily level is traded up to that level already, and I've opened the chart and it's still showing as a naked point control, for argument's sake, that level is still valid. I think that's where a lot of people do get confused, because you look at, let's say, look at the daily, like you just, that's that scenario. You looked at the daily, you looked at, I presume you looked at a 1 to 3, and you think, oh, it's already traded through that, so that's no longer valid. Is that right?
Yeah.
Yeah. No, it's still valid. It's still valid. So basically, all you want to do is open the correct chart time session at that particular time. So generally, as a general rule, I would open it up 10 minutes before. Okay.
Right.
And then they won't think, oh, well, that's already been traded through at I don't know, at a previous time. So that's no longer valid. It's definitely still valid.
So I've been opening up, say, the 10 o'clock chart half an hour beforehand.
Yeah.
Where I think price is going to open up. But sometimes price gets to the level before the 10 o'clock chart should be open. And I don't know to take that as a level or not.
Basically, if it gets there at 10 to 10, for argument's sake, and it's open at 10 o'clock, the level that opens at 10 o'clock is still valid. It doesn't matter whether it's traded up to it before that or not.
Right. Okay.
Does that make sense? So basically, only trade the session times at that particular time and ignore what goes on beforehand.
Okay.
Yeah.
Cool.
Okay. Any more questions? I'm going to go on to the chat here, I think. Okay, Oliver. So Oliver, we'll do that for you. Okay, on the for everybody else as well, obviously. Choosing the right levels, and we'll do you a DOM video as well. So hopefully that'll help you and everybody else. Okay. So Dino. But for example, the 1 to 3 POC area is also daily value low. That's been tested 3 times before. I would not look at it. The latest time was it when he asked that. The retest value is also 1 to 3 TPO by Rita. Do you take the daily pockets? Button. It's better, yes. But for example, the 1 to 3 pop area is also daily value low. That has been tested 3 times before. I would not look at it. I'm not sure what you mean, Dino, by that. Could you just elaborate on it a little bit more? Can everybody see these questions as well? Or do you want me to read them out? Yeah, okay. Cheers, Mark. If you want to elaborate a little bit more on that, Dino, I'm not sure what you mean. Anybody else got any questions while Dino's thinking about elaborating on that question? No? Anybody else? Anybody else want anything adding to the education section of the course that you may be struggling with? Don't be shy, just tell us. It's it's absolutely fine.
I think it's the same question for about the resting orders. What do we need to do when we see a very big order appearing on the DOM?
Yeah. Okay. So
is it an attractor or not?
Well, pretty much the depth of market. Personally, I don't even have it open. I don't know whether Benecki does or not. But personally, I don't even look at the depth of market. But obviously, I'll get Benecki to do a video on that, on the depth of market. So if you are looking at DOM, you'll understand it a bit better.
Okay.
I'll get him to do that. But you got to remember, the depth of market is only a small piece of the puzzle, and I've said previously, the most important levels are the profile levels, these levels here.
Can I speak something?
Yeah, go on, Oliver, carry on.
Yeah, I mean, like when we have these labels here, then how can we kind of assume or check it, like will it respect that label or not, checking those DOM and those kind of things?
How do you check it?
I mean, if there is possibility to this, well, I heard some people, I don't know, something like that. They always say that, well, some people go for, when they see big orders and like that, well, they do scalp, that is different thing. But I don't know, they are talking about all those things, so I just got confused, thinking that maybe I'm the only one who is not able to understand.
Okay. Are we talking about the depth of market again here or not?
Oh yeah, I mixed it up. Yeah, sorry if I mixed it up with different topic.
Okay. Okay. Yeah. Okay. Well, okay. Well, like I say, we'll get a video done on the depth of market, so hopefully you understand it a little bit better.
Okay, sorry. Yeah, I misunderstood.
Yeah, it's okay. No, it's fine. Absolutely fine. Absolutely fine. I mean, as a general rule, okay, is I look at the footprint, okay, and all I want to see into a point of interest is volume. So if for instance we've got a 5-minute candle on the footprint printing, I don't know, let's say 300 contracts in total, I want to see sort of 600 or 900 contracts in total into my point of interest. And that gives me another confluence to take the trade in the opposite direction. And when I say the opposite direction, I mean sort of this scenario. If price trades up to outside of our area high here into a POC or another area, if I see volume as well on the footprint and it's sort of 2 or 3 times more than the previous 5-minute candle, that's what I like to see to take a reversal. That's the only time I use order flow, just into point of interest. When it's sort of, in the middle of nowhere, I don't even bother looking at it because all I'm looking for is generally the extremes, extremes of value. Does that make sense? Okay. Mark was asking if the example 1 to 3 TPO has been traded through at 12 p.m. Would you look at it? Answer is yes. But if the area was traded through 3 times already in the morning and we come to the 1 to 3 PO, I wouldn't look at it because the example of the area has also daily value low, but has been tested too many times. No, I would still consider that a valid point for entry, Dino. Definitely. Like I say, you want to ignore the other time frame TPO levels when we're not in that time frame. Just totally ignore them. But when it actually opens, that's when I want to start taking consideration. Because if we've got a daily value area low, and then we've got at the say 3 p.m. there's a POC as well in that area as well. That is definitely a trade I would be considering to take. That makes sense, Dino. Anybody else? We've only got a few people on here today, so we're quite unique. How about VIX 1994? You're being shite. No? Any more questions, anybody, about anything? But wouldn't that be a risky trade to take, that given the value has been tested 3 times? Because these in my opinion, Dino, no, because you've got a daily value area low. I'd like to see the daily value. I'd like to see the actual 3 p.m. for argument's sake, 1 to 3 p.m. POC to be outside the daily value area low, sort of in this scenario here that I've shown you on this drawing. Does that make sense? Because I see all the time a lot of traders getting stopped out just by taking trades from the value area high and the value area low. In the perfect world, that'd be great, but unfortunately, it doesn't happen like that. It always generally just goes above or just below those areas. Anybody else got any questions they want to ask me before I get an early finish? Okay. I think someone's just joined us now, so. Hello, Ben, you all right?
Yeah, good. Yourself, Darren?
All right, all right. How are things? You all right, yeah?
Yeah. It's not been good.
Okay.
Just the past few days, my wife lost a baby. So
Oh, God, sorry to hear that.
so,
Oh, God, awful.
so I've just been sent home to come and see her. So she's sleeping now. So I decided to log in and see how far.
See what's going on. You got me.
Yeah.
You got me today because Benefi's had a few problems with his girlfriend's daughter as well. I don't know if you know that or not. She's in hospital with I think she's got a split liver or something. Yeah. Yeah. How's your trading going? Have you done much anything or what were you up to with it then?
Oh, yeah. I've been sort of using a very smaller lot size.
Okay.
And I haven't really got my chart up ready because I was having issues with the setup with stage 5 because the money was stuck somewhere.
Okay.
My bank couldn't send it, so they finally told me before the Easter weekend that they've got the funds.
Okay.
So it's all set up now. So all I need to do is just get the Sierra thing going. So, but they've given me, I think, 3 weeks demo to try a few things. So I'm just taking the demo for now.
Yeah, definitely. Yeah, definitely do that. Yeah. Definitely.
Yeah.
Definitely, yeah. So you've not really started trading yet. You just sort of been.
I have. I kind of use your morning the
Stream.
live streaming because
Okay.
I'm able to know certain. I'm using based on some of the videos I've gone through. So I'm using it as a guide really. So I trade from based on your streaming.
Okay, cool.
I've been using very smaller lot size. So I've just put £100 in
Yeah.
IC market and I'm going 0.01 basically.
Yeah. It's fine. It's fine. You're only testing.
And so far so good because I haven't had a loss.
Well, yeah, there you go then. There you go.
And the whole of last week, I did that to I think it was Good Friday. I didn't trade on during the holidays. So yeah, so far it's been blues.
Good. That's good, then, isn't it?
Yeah, yeah.
Wait until you get your wait until you get all your charts set up as well. It's a bit of a pain getting all your charts set up, but once you've got it, once it's done, it's done. You don't have to think about it again.
Yeah, yeah, I can't wait. I can't wait. That's what I said to you last time. It says like, if I get to your level, man, there'll be no drinks
No stop loss on the drinks. I
no stop
remember.
loss on the those drinks, yeah.
Yeah, I do remember you saying that. Yeah, because I spoke to Benecki about that. He was laughing his head off.
Well, he took me on that offer, you know.
Yeah. No, we'd definitely be up for that 100%. Yeah. We do like a bit of a beer, like most. Sorry to hear about.
Yeah,
It's not good. No, it's not very nice, is it?
we're in A&E for like the whole weekend. Literally, they didn't have any bets or anything, so we were there for. We went there. It happened at 3 p.m. We were there to midnight.
Wow, nightmare, bloody nightmare. Oh, terrible. So you're winning. So you've got no questions then, Ben.
No, I've still got questions. Loads of questions.
Well, go on, fire away because everybody's asked me a load of questions already. But if you've got some,
So if you see the blue cluster on the volume area
on the current day or the previous,
is that way from, or will your zone be on the profile high?
yeah. So I know you went on the call area. We're just talking about this. So overnight, this area here, yeah, was the weekly buy area high. So what I do in the morning, okay, is have a look, see what's happened in Asia. So in Asia session. So we trade in the morning. So we can see this area here had rejected the weekly buy area high.
Okay.
Talking to Mark, because he likes to trade the extreme, which is right. Okay, these are extremes. Okay, but because it rejected the weekly buy area high.
Yeah,
that's the extreme of the weekly. So that's a really good level to get short from.
Yeah.
If we open up in Asia, if we open up in Frankfurt, at a delta or a pot, which I believe it opened up at a pot this morning. I wasn't on the charts, but I got told it was at a pot. So this was an opportunity to get short, even though it took forever, I believe, to finally get to the buy area low here. So in a nutshell, what we're looking for is we don't want to trade just from buy area highs and buy area lows. I see people do it all the time. Where they just think, oh well, it's coming into the buy area low here, for argument's sake, and then they'll get long in this area, just to go long here for argument's sake. And I've explained in the course that what we want to see is we want to take trades outside buy area lows, for instance, in this scenario, and let's just say this black line here was a point of interest, i.e. it could be a POC or a delta on another profile that crosses over to that area. That makes sense?
Yeah.
So these you don't want to just take trades from this area. I mean, sometimes these do work out, but probably 2 out of 10 times they might work out.
I've been caught up before. Like I will never be. I got caught up one time, hoping to God that thing comes down, and never came down.
Yeah, because you to get like here or something like that, and you go,
I got in one time, and it was news. It's in the buy area high. Let me short it. So I shorted it, and it kept on going and going and going.
Yeah.
And by the time I was able to big time.
Yeah. You don't want to take trades from buy area high, buy area lows. Like I said, occasionally they will work, but very, very occasionally. But if I was going to take a trade from a buy area high for argument's sake, I want to see another profile crossing over it. So if I had an AM pop at the buy area high here, yes, that's a trade I would consider taking short. But as I was just explaining earlier, before you got on the call, is I like to see volume into that area. So if we've got sort of, I don't know, call it 300 contracts printing in this area here, and then let's say, for instance, we get 600 contracts printed in this area, so like twice as much. And we've got 2 confluences at the very, very high, with
Yeah.
it being an AM POC as well.
Yeah.
That this volume and that AM POC and the very, very high, that's enough confluence for me to take a short.
Okay. So if you have POC and then you have the buy area high, or let's say if it happens in buy area low, because of those 2 confluences, you would take the trade.
Yes. Yeah. Yeah. But as a general rule, I generally find that price will just go outside these areas here, the very area high and the very area low, into
A POC.
into a pot,
Yeah.
into another pot.
Yeah.
It's just a matter of looking at your other charts, you know,
Mm.
in them scenarios.
And I've noticed that during the blue cluster area, you know, where the high volume areas are, I
Here,
think that those things price tends to stall around there as well. So
it does, yeah. I was just explaining before, funny enough, that this point of control, yeah,
yeah,
it's been tested about 5 times, okay,
yeah.
but every time it's getting tested, it gets weaker and weaker.
Mm,
If you can imagine it like this, if you can imagine we've got lots of orders in this area, so lots of short sell in this area, yeah?
yeah,
So prices coming up, getting filled, reject, gets filled, rejected, gets filled, rejected. And eventually all them orders disappear.
okay.
There's no more short orders in that area. And that's why we eventually break through this point of control. You can imagine if you've got, you know, 5,000 orders here, and every time it's coming up to this area, 1,000's getting filled, then another 1,000, another 1,000, another 1,000. We don't know the exact number,
Yeah,
okay, but realise that when price is coming back up to this area here, this area is getting weaker and weaker.
yeah.
It's just common sense, isn't it, when you think
Yeah,
about it in that
yeah.
scenario?
Yeah. So I tend to have like a rule of 2 or 3. So if it hits about the second time, I don't want to go there anymore.
Yeah, that's good. That's good to have. Yeah, that's good. That's
Yeah.
that's a good route to have.
Yeah, I feel the market makers know they'll wait for you on the 3rd time. So
Yeah, the third time, yeah. You actually don't know when it's going to finally break,
yeah,
but just know that when it gets tested over a few tests, it is finally going to break. And I say that about it's actually in the course. I can't remember how to explain it in the very high, very low. Eventually, if this gets tested a few times, yeah, it might come down a few times. Eventually, it's going to break out.
breakthrough. Yeah,
Eventually.
yeah. You said something about if it sort of the price start building a cluster around it, if it will first after a while will break through upside or for sometimes will break down.
Yeah, that's right. That's right. We can see that in this scenario, can't we? We can see this area here. You know, this is sort of like a cell zone, isn't it? Which we've got multiple tests, haven't we? And then we've tested the value area low. It's obviously tested the value area low overnight here.
Yeah.
And then come down. And I believe we had something on another profile because Dino said before we had I think it was this area here. I think it was a 1 to 3 POC. So price obviously came down to the value area low. But look, he's broke the value area low. Most people were getting long in this area. But look for the liquidity areas just below the value area lows or the value highs on a smaller TPO time frame. When in fact it doesn't have to be a small time frame TPO. It could be a weekly. You know, you could have a weekly pot here.
Yeah.
Just another pool of liquidity to obviously go the other way. I don't know where the market is now. Well, this is actually today's profile here. This is today's profile, and this is obviously the.
I think I took the long from where the arrow is. That I took it.
Did you? Yeah.
Yeah, back to the blue cluster there. When I saw it, I knew like we're going to hit a brick wall. So I closed it quickly.
Yeah, well, you did the right thing, didn't you? Because obviously you can see it's come back down again.
Yeah.
Did you have another confluence in the area here, or was it?
Yeah, it was. I think it was on the minute. You used the 2 minutes and you used the daily on 15, right? So on the smaller one, I saw a blue cluster on the bottom near where the where the arrow is.
Yeah,
I saw it on the on that one. That's why I entered. So there was 2 confluences. So I used the 2 confluence to
that's
enter.
it. That's it. I mean, it sounds really simple, yeah, and it is simple when you get used to it, and it sounds crazy when you obviously people are struggling and so
The
on.
amount of the videos I've been going through is it feels like my life is dependent on it.
I know what you're saying.
I can't wait to get the chat going and so I can do some practice on them. And yeah, it's starting to sort of make sense. Because I haven't got the chat, so I'm using your live streams.
Yeah, well, if
morning.
you're winning off the live stream, wait until you get your charts set up, which you should have. Which is it going to be set up in the next day or so?
Yeah, it's actually set up. They sent me an email during the but obviously with the Easter holidays and stuff. So right now, what's happened is Sierra Chat. If you set it up, they take the money on the 1st of every month.
Yeah.
First, so and I've got the demo. So I'm going to use the demo to the end of this month, and then I'll sort of pay for the subscription and everything together.
So you've got delayed data then at the moment.
Yeah, the delay data. So at the moment, yeah.
Yeah, that's all right.
It's kind of a pain to get used to, but once you get used to it.
Once you get used to it and you've got everything set up, it's all automated, to be honest with you.
Because I come from a Ninja trader background, so that's what I was using.
Right.
Basically. So it's very modern, and compared to Sierra is very
right.
hard.
I know what you're saying. Yeah.
So if you have sorry
right.
Body. So if you have a chart in front of you right now, what we're looking at before today's one start printing, where will you draw your zone from? Will you draw your zone from the SS area, or will you draw your zone from the high volume area?
The first thing I do in the morning, okay, is to see what's happened overnight. Yeah.
Okay.
So this was the rejection, wasn't it, from the Asia rejection, and this was the week. Let me just put the pen back on. This was the weekly buy area high, I believe.
Yeah.
Okay. So that here straight away, as soon as I see that as a weekly buy area high, I'm instantly looking for shorts.
Okay.
You can get a little bit confused because Mark was saying before, because he likes to trade the extremes, which is right, okay, which is obviously he was looking for probably shorts in this area. He'd probably tell me if I was wrong, but I imagine so, if we've got another confluence in that area this morning. But because we rejected overnight this weekly buy area high, this weekly buy area high is obviously stronger confluence than a daily buy area high, because this is the weekly.
Yeah.
This is a great confluence.
Yeah.
So because we opened up at a AM POC, I believe, so I was told, okay, in this area, this is the shorting opportunity to get short with stops just above the weekly buy area high.
Yeah.
So you'd have like a 6-pip stop in this scenario, and you would target the buy area low in this scenario. But apparently it took about 3 hours to get to this area. It's moving very, very slow at the moment, the pound. We're just discussing that. It seems to be moving in sort of 10 pip ranges, and it has been for the last sort of 6 weeks. So at the moment, you're just better off taking your 10 pips and getting out of there,
Yeah. Have the algorithm changed or something? I've noticed the pound is very slow of late. Like
it's just, I don't know. It just seems to be how it is for the sort of the past sort of 6 weeks. It's just been really, really slow. It's been better in the afternoons, because I was talking to Beneki about it, and we just said it's just really, really slow. It's just how it is. I'm sure it'll come. It'll change.
Yeah.
But it is what it is. But like I say, generally in the afternoon, I don't know what the market's done right now. Let's have a little look. Let's have a little look. What's the market done today? Let's have a look. Yeah, so it's traded 15. Yeah, it traded a good sort of 30 pips from the sort of from the Asia low.
Yeah.
It's sort of traded 30 pips up. It's at 50 now. It's on 15, so it's something like 35 pips. Which is obviously the afternoon, and I don't know what Dino said that there was actually in this area here there was a 3 p.m. POC, I think Dino said, in this area.
Okay.
So that would have been a trading opportunity in the afternoon to get long,
Mm.
and you would have been, to be fair, you would have been closing out the value high or something like that, whatever the first point of resistance is,
So you definitely take your profit near the buyer high, right? You wouldn't let it go all the way to the pop.
No, I take profits. I mean, I might leave a little runner.
Okay.
But I'd rather take, for the sake of, I don't know, 50 to sort of, I don't know, 59, sort of, 9 pips or something like that. I'd be taking some off at the value high, and I might be leaving a little bit of a runner.
Mm.
That's what I'd be thinking.
Mm.
Because you can see we've actually rejected there, but obviously it looks like it's definitely traded. It's gone past that.
Yeah.
Looking at, and he might be heading to this area, but I don't know, obviously, because I haven't got the chart in front of me at the moment.
With single print, is single print what part of your confluence there? So let's say if you have the value area high there, yeah, and then you've got a single print above it, would that serve as your 2 confluence?
Yes, it would do. Yeah, it would do. I would prefer if it was a profile print. For me, I find profiles a lot stronger
Than the single print.
But if we have this scenario here where we had let's say this profile here, for argument's sake, here,
Yeah.
Let's say this black line was a single print area. Yeah, that would be an area of interest.
Okay.
Yeah, if it printed it on the daily profile as well.
And you talk about run through. So when do you feel if a profile's run through like a single print or any point of resistance that profile doesn't serve your purpose anymore?
What do you mean by that? What do you mean? I think
let's say if you have like your point of interest set up, and then the price is run through, maybe a news or something is taking it go way past the point of interest. Would that profile where you've got your point set up, like the supply and demand set up, would it won't count anymore, right? You will cancel that and move on.
Yeah. Once a level has been traded through, it's no longer valid.
Okay.
Apart from this scenario here,
yeah,
where it's a POC, and you can see it's been tested multiple times. It's still valid, but we don't know when it's going to break. Nobody knows.
Yeah.
We just don't know that. But the confluence is obviously the weekly area high as well there in this area.
What I've been noticing is that if you have what you just circled where you were, if you have the blue clusters and you've got pop in it, just like that, it's very, very strong.
Are you on about this? If we had a blue cluster here,
yeah, the blue cluster down. If you come down here, there with the pop is very, very strong level.
Yeah, we generally get volume and POCs in the same area most of the times. Because what I like to take trades from is if this profile, let's say for argument's sake, obviously this is the value area low here, and let's say we had a blue cluster here. Yeah. Below this value area low here.
Yeah.
This is a strong confluence for me. Because we know a lot of activity, a lot of volume has happened in this area.
Yeah.
So the chances are that we're still going to have limit orders sat here, buy limits in this area here, waiting to get filled.
Mm.
You know, if we didn't have a other profile POC or delta in this area, but we have a blue volume cluster in this area,
Yeah.
this is a confluence
Mm.
for me.
Okay. Mm. Makes sense. Mm.
Okay, okay, I'm going to jump on. Is that okay? Is that okay for now, Ben? I'm going to jump
Yeah,
on.
yeah, it's
You know,
perfect. It's perfect. Just sorry to what you know the VWAP, yeah.
yeah,
In the morning it's very close to to the middle of the VWAP, all right, to the black bit. It's very if you're looking at it as a confluence, will you because it's closer to each other, it's really hard to know which direction. Because early in the morning, around that 6:45, 7, is really close to each other.
yeah.
Do you make decision based? How do you make a decision based on because it's so close to each other? I sometimes have to wait for a bit to get the direction.
Yeah, I know what you're saying. But generally, because Asia at the moment it's just been rubbish, hasn't it? It's sort of been like
Yeah,
a 10 pip range.
yeah,
But in that scenario, if the candle is at the sort of the bottom of the range or into the deviation band, should I say, I just look at the profiles. I lean on my profiles more than anything else.
yeah.
And VWAP is secondary.
Mm,
As far as profiles is the number one for me.
yeah,
And then obviously the volume clusters and profile and obviously smaller time profiles as well.
yeah.
They're my go-to. And
Mm,
VWAP in the morning, because it is such a tight range, all I'm trying to do is sort of take profits. Let's say the AM opens,
yeah,
and let's say it trade up to a point of interest. I would close at if it's traded up, I would close at like the AM profile low where it's opened up at
yeah,
because the range is so small in the morning. You just as a general rule, you won't get like a big burst of 30 or 40 or 50 pip moves. Very occasionally, but only like 5% of the time. So
yeah.
you just got to take your profits at those areas, and that would generally be at the deviation band. So because there's not worth taking a trade for sort of, 2 or 3 pips, is it? It's not, if the range is really, really tight,
Yeah.
You don't want to say, oh, I'm going to take a trade here and I'm going to trade up to VWAP. I'm going to take me profits and you've got 3 pips.
Yeah.
You know what I mean?
Yeah.
That's when I lean on my profiles.
Yeah. It's true because I found that in the morning the VWAPs are not really helpful because
No, they're not.
it's just so close to each other you don't know which direction. But
Yeah.
the profiles are really better because it just gives you a clear direction.
Yeah.
Yeah.
Yeah. Lean on your profiles more in the morning when you're trading first thing in the morning. But like I say, it's just been such a tight range. And Mark was saying before, he said it took about 3 hours or something, and 3 hours from like 40 to sort of 25-ish, 40, 25. So this area, so maybe it took like 3 hours to do like 17 pips if you got the very top and to the very bottom, which is a long time for 17 pips.
But if it's going for a stop loss, it doesn't waste time, does it?
No, it doesn't just go straight to it. A little blip and it takes you out. Yeah. Okay, I'm going to move on to Dino then, Ben, and then
Yeah.
we're all good. Let's have a look. He lost his internet before, so risky to take trade. And like I said earlier, that is what confuses me. Taking delayed by the hands. That is what confuses me. How then is it not risky to take trade in the example I said just earlier? So I'm not sure what you mean by that, Dino. That is the worst. I'm sorry, I lost my internet connection now.
Hey Darren, can you hear me? Sorry.
Oh yeah, I can hear you. Yeah, sorry.
Hey,
Yeah.
hey, I connected my mic. Sorry, I was talking about you were talking about when in this example the daily POC has been tested like 5 times and it's still valid, but we don't know when it will be tested through.
That's right. Yeah.
And in my example, is it the same when we have a very area high or very area low daily that has been tested like 3 times? Is it riskier to take trades like 4 times and 5 times because we don't know when it will be traded through, and it has been tested a lot of time before?
Correct.
That was I was asking when we're talking about when we open like 1 to 3 TPO point of control, but we have already tested that daily well like 3 times, and it is risky.
Yeah, I understand now. Yeah.
Great.
Yeah, when an area's been tested quite a few times, especially on a daily profile or a weekly profile, monthly profile, especially they're high time frame profiles, they just become weaker and weaker, and then finally they do break through.
I made my rule like if it is monthly or weekly, I let it. I watch it for if it tested like 3 times after not, and for daily, I watch it 2 times. So if it tested like 2 times already, I don't watch it anymore.
Fair enough. I think that's what Ben does. Ben's just been saying that he says on the daily, if he said 2 or 3 times, if it does it 3 times, he doesn't consider it as a valid area anymore, which is a good thing to do.
Yeah, because I have been so many times in a trade, like third test, and it just goes the other way. Given all the confluence we have, it just doesn't matter.
Yeah. I understand that. Yeah. Because basically, in a nutshell, higher time frame trumps lower time frames.
Yeah.
That's why I said about this morning, this area here on the daily. This was the weekly buy area high. Yeah. So the weekly out trumps the actual daily.
Yeah, I actually took that into consideration because at the morning when I looked at it, I saw we had tested the weekly very high. My bias was short, but then I remembered your questions in the course, like what should we ask ourselves if we are in the middle of the POC, then it's just better to wait that we come to one or other extreme. So I just discarded that trade, trade to look at it.
Yeah. So did you get along? Because I think you mentioned the 3 o'clock.
Yeah. I got along from the third retest from the daily value because there was a very high at 1 to 3 TPO, and also a PM delta was there, and we had great confirmation of footprint increase in volume and delta switch.
Perfect. So that's what I was just explaining before, wasn't it, to everybody? I was saying if you get that sort of increase in volume, which you've got, we went to 300 to 600 into your point of interest, it's go time, really, isn't it?
And what helped me the most was when you said like 2 months ago that we just look for the stop. So I wasn't looking at very low like the area. I just waited that we first come for the stops and then waited to see if we have a reaction.
So here you waited for
yeah. I wouldn't take the trade before that.
Perfect. So you're understanding what we're trying to explain.
Yeah. It makes a lot more sense because everybody's looking to go from very low or very high. But if you have a zone lower, we first wait for them to get stopped out, and then we take our trade with better positioning.
Yeah,
it makes so much sense.
Yeah, exactly. Because when you think about it logically, that's where the stops are, isn't it?
Yeah.
And
I never looked like that before, but it makes so much more sense. And
it's just sort of sitting on your hands and just being patient, isn't it?
Yeah.
That's why I say you're better off trading extremes. But like I said, this weekly would have been a nice, this weekly value high overnight with if you obviously opened about a pot, which would have been definitely a trade to get short, 100%. But it took like 3 hours, Mark said. It took the bloody ever, which is a bit of a pain in the arse. But this entry here that you got is absolutely fantastic. Here. Did you get to the value high, or was it VWAP or something? Did you get to it?
To the very high, just classic Apple to the other side.
To there, brilliant, excellent, excellent, good. I took this one. Oh, that's in there. I took this one, but cut it to Indigo. Took it as well. That's good. Awesome. Dino, do you trade NQ also? No, I don't trade NQ, no. Oh, you must be talking to each other now.
Darren, also, I didn't look for short at this period that you mentioned. Even given that we have took previous daily high and went into our POI at the point of control, or just the latest, the
Yeah.
because we haven't got any other point of any other area at other charts, and
Is
also
it
we
not?
broke. No, it was just at the daily, and we broke out of range. So my thinking was we were going to go higher
Going balanced.
because we were in this range whole day, like, and after we broke it, I just wasn't looking
And
for shorts anymore.
if I remember rightly, there was news on Friday, and this was and then it's moved back up on. There was news, wasn't there? And this was
yes.
This was the move back up. Okay.
Yeah.
So this area here is supporting longs, isn't it?
Yeah.
Because we've got that P-shaped profile.
Yeah, so it's expected bullish.
Yeah, so when you've got that profile, you can expect a bit of a liquidity sweep of these area lows, which everyone's getting long too early. Yeah, these are the more than likely these short sellers here. Yeah, got the stops underneath here.
Yeah.
And then they've exited the position, they've gone short. So when they exit the positions, it then goes long, doesn't it? Which we can see in this scenario here. But if you waited all afternoon to get that trade, that's awesome. Very good. Good to see. Good to see. Right. So I think we're done, aren't we? I think we're done.
Can I ask one more question?
Carry on.
If you remember just the news you talked about last Friday, where we bounced from the daily POC. Would you usually take the trade given that we have already gone in balance? I wouldn't take the trade because you said you just don't look at the price after we have gone in balance, and in a lot of examples, in this example we have been bounced from there, but in a lot of examples it just trades through after the news and it goes even more in balance.
Yeah, I don't. So, I personally, I hated balance days.
Me too. I think most of the losses are on imbalanced days. It just is.
It's just trying to catch the tops or the bottoms. It's a nightmare, isn't it?
Yeah. So I avoided this trade. So I'm trying to avoid this kind of trades because in most times it just doesn't bounce.
No, it doesn't. It doesn't. I mean, this trade here, this one here, this this scenario here, it was only a short trade, wasn't it? It was only going to be.
It was only like 15 pips, and then it went up.
And it's gone. And then it's gone again, hasn't it? It's gone.
Yeah, it's gone upwards. That's why I wouldn't even take it because I thought we were going to go upwards, given that we broke out of
But the
range.
thing is, you got this trade here, so from here to here, which is absolutely perfect.
Already make my money done.
Just go right.
Job finished.
I've made my money for the day. Got my trade.
Doesn't need to force anything.
Let's just close it. It's going. I feel like it's going to go in balance. You've no need to carry on. I mean, the less you're in the market, the less risk you've got. I just like to get money out and just be done.
Yeah,
you know what I mean, I don't want to be sitting on the charts.
You have the most of the day for doing what you want, and you already make your money. So
yeah, that's why.
Why say that 10 more hours for one more trade, or it doesn't really need to be necessary.
It's pointless. It's not necessarily. If you've made your money, on your first trade and you've got it, or you want to trade the afternoons. I'm considering just starting to trade the afternoon now because, I mean, getting up at 6 o'clock in the morning, and then if you're going to wait for sort of 10 pips or whatever, it's just not bloody well worth.
Yeah, the mornings last 2 months have been awful. Just like awful.
Yeah, the afternoons. If you looked at the AM profiles and you looked at the PM profiles, you'll see you get the bigger moves in the PM.
They're a lot bigger.
Yeah.
You just have to be cautious about the imbalanced days. But if we have no news and if there are a lot of great opportunities, why not?
Yeah.
If you are ranging in some big range, just take the trades and make your money for the whole week.
Yeah, of course, exactly, and obviously that's what you've done today, haven't you? You've got that very high to very low to very high, which is brilliant. But you've waited. The good thing is what you've done there is you've waited.
Yeah, I usually like 6 months before I wouldn't. I would just take the trade when we touched the very low and probably stopped out. But now every time I look for the stops to be taken, and then I want to. If they're not, like, what does it matter? It's gonna be. I'm just gonna wait for another trade. But if it is, I'm gonna take it.
Yeah, that's good. That's good. That's what I see a lot in the Discord. Is a lot of people just get in at a very, very high, very, very low. You just want to get hold of them and go, stop doing it.
Yeah. I already done it before. Like for the first 3 to 4, 5, 6 months, I have done it. For the last 6, just and no.
Right. Okay. So have you found that the education is sort of
yes.
opened your eyes as far as that's concerned?
Last 3 months, I would think. So I have been in the Discord for like a year and a month for now, and like for the 6 months, first 6 months, my education, I went through everything like 6, 7 times, everyday trading. But for the last 3 months, after the education went out, I think my knowledge it's like 400%. I think so much stuff that isn't in Discord and the most of the people doesn't know. It's the most important things that just the little things that they add up and they make so much sense. So it's very good.
Good. I'm glad it's helping. That's what really fun the day. And it's difficult to explain it in a recap.
It really is. It really is. It's so much thinking in your head that doesn't go into recap that you consider that cannot be told.
Yeah, because we take it for granted, and when we're doing these calls and we've done the course, etc., we can break it down slowly and say, right, this is what's happening, this is what we're looking for, and the reason why I mean, like I said before, very high, very low will get respected, but very, very rare.
Yeah.
I don't get upset if I'm waiting for, let's say your trade today, you're long. If price came down to here and took off.
Doesn't matter. It's going to be the next trade today or tomorrow or the next day. It doesn't matter.
Exactly. I'd rather see, everybody taking trades outside these areas.
Yeah.
Into a point of interest.
Because if you think about it, if you take the trade before, it's like 50-50%. But if you wait, it's like 90-10%. And then it is just emotions and you not willing to be patient and wait for it, or be fine if it doesn't come there.
Yeah, and it's less stressful as well. There's no stress because you don't have as much drawdown and blah blah blah.
Yeah.
Everything about it just changes your point of view, and then you realise all of a sudden why your win rate just goes through the roof. You just go, well, because I'm waiting now, I'm just being patient.
Yeah, I had problems with that. Like I was before, I had problems with like I don't take the trade and then I'm worried, why did I take it, or I should have taken. But then when I do take it and after I see my recap and see that I shouldn't have taken it because it wasn't the best A+ setup and I got a loss, it just makes sense to wait and be patient. The trades are gonna come anyways.
Yeah, just I always say that the good point is let the trade come to you.
Yeah,
just let it come to you. I'm just going to wait. I'm not going to get in. Because you get up in the morning really early and blah blah blah, and you think, oh, I've got to get a trade. I've got to be done.
Yeah,
I've got to get in. But if it's not there, just don't force it.
The price just doesn't care.
No, it doesn't. It has no emotion.
Yeah.
And every moment in the market is unique. There's not, you don't know. It only takes one other person to mitigate your trade idea.
Yeah, that's
in the world, and there's millions of people who trade the markets. But if someone takes the opposite trade against you, and they've got bigger capital, it just mitigates your trade. Your edge is your edge, and you just take the trades that in line with your edge. And this
but that is what you talk about at the beginning. You have your 20 trades, and that one is just loss, and the other 10 are gonna be a win. You tested it, you know it. You don't have to worry about it. A loss is just a loss. It's part of the game.
Yeah, exactly. You just got to go, well, I don't know when my loss is going to come. I don't know when the win's going to come. But if you do this back testing, or people do this back testing, and they realise that you are going to get losses, but as long as your wins are better than your losses, well, you're up. And you just don't know when them wins and then the losses are going to come. So if you do the back test, and then psychologically in your mind, you then realise it's just a numbers game. It's basically, like I say about the casino, their edge is 4.5% over a year, but they turn over hundreds of millions of pounds.
Yeah.
But they earn 4.5%.
The back testing just gives you the confidence you need to be sure that your edge is the edge you need.
That's why I say you have to do it. It's
without it, you're just gonna be unsure. Like if you take 3 or 4 losses in a row of unlucky market, you're going to think, oh, I need to change something. Something is wrong. I didn't do the trades I needed, but it is just like it works that way sometimes.
Because you know in your mindset, I've done this back test and I know over a period of 20 trades, I'm going to win. So if you just take it like a robot,
it doesn't matter. It just doesn't.
And you don't change the parameters, because if people start changing the stop losses and different take profits and blah, 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 then you change the parameters of the game, aren't you?
Yeah.
At the end of the day, you don't need to be doing that. If you want to go down the mechanical route of it, it's a great thing to do, it really is.